Welcome to another weekend bonus episode of the Tech Meme Ride Home. I'm Brian McCullough. Well, I mentioned it a couple weeks ago, but Tesla has had quite the month. Maybe one of the banner months of its entire life as a company. So no better time than now to check in on the world of Elon Musk, and to do so with Rob Maurer of the always excellent Tesla Daily podcast. Why did Tesla stock shoot to the moon earlier this month? Why did it come back down a bit and then inch back towards the moon later on this month? What are the fundamentals behind that excellent earnings report? And is this it? Have the Tesla bulls finally won? Such a fascinating company. And for contingency purposes, I'm going to say up front that we're recording the afternoon of February 14th, Valentine's Day. Happy Valentine's Day, Rob.
Yeah, you as well.
Well, listen, I'm trying to come up with some Valentine's joke analogy or something about what we're about to talk about. But, you know what? I feel like every time we talk, it's mainly just me being like, okay, Rob, what the heck just happened? Before we get to the stock price and everything that happened this month, we should probably, I'd like you to walk me through as best you can the earnings call, and specifically, not the earnings call, but the earnings report. Specifically, like, what were the key drivers? What did people hear that everyone thought was so good that I need to understand about what happened?
Sure. Yeah. And I think for that, it's probably best to go back kind of 2 earnings reports ago. I don't think we've spoken since then, but that's really when the stock started to take off. Was after the Q3 delivery and production report, and then the earnings report after that. So basically what Tesla has demonstrated in the last 6 months or so is proof of concept of the business. And that's been the big reason that the stock has appreciated in my mind. So this year they delivered 367,000 vehicles. They turned profitable in the second half of the year. So both in Q3 and Q4 they showed strong profits. That's always been the knock on Tesla is they've grown revenue significantly over time, vehicle deliveries significantly over time, but they haven't been able to be profitable because of the high growth rate that they've had. But, that's been a knock on them. So this year, the Model 3 in volume was happening throughout the course of the year. And with that happening, they finally, covered their fixed costs and things like that and flipped the switch into profitability, demonstrating that they can be, a volume producer of electric vehicles, and that is a sustainable business model. So Wall Street obviously likes that. It removes a lot of risk when that is demonstrated, and it allows people to start to get excited about, what the future may hold for Tesla. So I think that's the big thing that came through, in the last couple of earnings reports. And specifically, Tesla has surprised on the gross margin line. I think a lot of people were expecting, even Tesla bulls, for example, were expecting, slower growth in margins, and in Q3 they definitely jumped up, and that was allowed Tesla to deliver that surprise profit that then continued on through Q4.
Do we know what the reason is for that, like why margins are holding up?
I think it's just that they're getting to the stage now where the Model 3 production is at like 7,000-8,000 per week, and because they're at that high of volume, historically the last 18-24 months or so, they've been ramping up from anywhere to 100 a week to 1,000 a week, 5,000 per week, and now at this level they're finally able to get enough margin per vehicle at that high of volume where it's starting to cover those fixed costs.
Well, and that's the other thing. I mean, I feel like at least one of the times we talked about before, it was we spoke together. It was around the time where it's like, can we get these cars out the door like we promised? And so like, is that also just completely off the table now? Like the production is what was promised and what was hoped for all this time?
Yeah, I wouldn't say it's necessarily quite to what was promised. I mean, Elon sort of famously back in, I think, 2017 said that they would have, he pretty much guaranteed they'd get to 10,000 Model 3s produced per week, I think sometime in, 2019 or so. And as I said, we're around 7,000-8,000 per week now. So they're not quite to what Elon had hoped for back then, but there are good reasons for that. They've basically adjusted their strategy a little bit in terms of where they wanted to produce the Model 3. So the opportunity opened up in Shanghai to do a 100% wholly owned factory there, which is a first for any foreign automaker in the country. So what that means is historically people have had to go in and do joint ventures where a Chinese company would own 50% of the company, the foreign automaker would own 50% of the company. Shanghai actually opened it up for Tesla and changed their regulations to allow Tesla to be 100% wholly owned. So with that on the table, they decided to take advantage of that and accelerate their plans to build a factory in China. So over the last 13, 14 months, they've been working on that. And they actually went from breaking ground in China in like January 7th of 2019 to producing vehicles in the exact same year. So going from nothing to actually production in less than a year, which is really unprecedented with this sort of a product and with this sort of manufacturing. So with that, they decided to, instead of investing more capital expense into production in the US in Fremont, California, where they have their factory, they decided to just maximize the output that they could get out of what they've already spent there and shift some of that investment into China. So that pushed back that 10,000 per week goal a little bit, but they should get there within the next few months now.
What about the lineup mix, the product mix? Like, I think again, one time we spoke, it's about like, okay, the Model 3's coming through, the plan working out that, a mid-range car, will really pull the levers and has that been working out? Is there something that I'm not aware of in terms of like, oh yeah, this, the entire portfolio is hitting all the marks that we expected there?
I would say definitely on the Model 3 line. I think, production has been really solid. It's maybe not what Elon once said, but it's still ahead of, what Wall Street expected. So last quarter,
I'm asking more about sales though. And like, because were you just talking about production?
Yeah. So sorry. Cause a lot of times I think of it in terms of production because Tesla, pretty much is able to sell everything that they make, especially for the case of the Model 3. When we last spoke, one of the things that was hurting Tesla at the time was Model S and X demand had fallen a little bit. Mm-hmm. So around Q1, for example, they delivered only 12,000 of those vehicles compared to 27,000 the quarter before. So a really sharp drop off. And that was one of the reasons the stock took such a hit, earlier on in 2019. But that has rebounded. So in Q4, for example, on Model S and X, they sold 20,000. So demand has risen there again as they've made some updates to the vehicles. And then with Model 3, demand is super strong there. They still have, 6 to 8 week delivery wait times in the US right now for new orders, and very little inventory. Their inventory levels are actually the lowest that they've been in about 4 years. So on the demand side, things are looking as strong as ever too, which is another reason, the stock is reacting strongly.
Well, yeah, let's not put it off any further. Look, what a crazy concept. A company that is demonstrating profitability, not just path to profitability or profitability someday or theoretical. Mm-hmm. And you pointed out that Tesla stock had been on a tear before that. I think what was it, like October, it was still under $300 or whatever. And so that even in January before the earnings, it had been, I don't know, tripling or something. But
yeah, I mean, back in June, the stock was $177 a share. In 9 months or so, we've quadrupled essentially, even slightly more.
Right. I think it's around 800 right now as we're talking. Mm-hmm. I mean, even that's a long way from the, 420 funding secured level,
Right.
Now, I think I actually haven't had a chance to listen to your show recently, but I saw in the show notes, and I heard some things also too. In this run up, this is a twofold question because from someone not paying attention every day, you're like, well, this is a classic short squeeze. But then I also was seeing some things on Twitter about and I think even one of your show notes hinted at yeah, there's some really odd behavior, especially as we were cresting $945 or something like that. So tell me what you can about, and we're not finance professionals or whatever, but the stock's performance and what we think we know about what's going on there.
Sure. I would say that short interest definitely plays into it. So just a quick brief on that. Basically what short selling is people will borrow shares from people that actually own shares, and then they'll resell them in the market and hope to buy them back later for a lower price, profiting on that difference. So basically a bet that the stock is going to go down. And historically, Tesla has had really high short interest, meaning a lot of people betting against it. And what that does, it creates extra shares into the market, which has the same effect as dilution, essentially, because there are extra shares out there that need to be purchased, and basic supply and demand that causes the price to be a little bit lower. So what we've seen over the last 6 months or so is short interest has fallen pretty significantly, not to the level that I would necessarily call it a short squeeze like we saw years ago with Volkswagen and Porsche, kind of when that whole merger thing sort of happened. The stock shot up, I don't know, like 300% in a couple days. It's not really to that level, but the short interest has definitely fallen. So we're at about 22.5 million shares sold short right now versus, 6-9 months ago, it was in the 40 million range. So that essentially takes, 20 million shares out of the market, which can definitely have a positive impact on the stock, again, for that same supply and demand reason. And then I think the other thing you're talking about is just potentially a little bit of manipulation that can happen in the stock market. I think probably don't want to get necessarily too much into that because that's more day-to-day type of stuff and
or even
more speculative.
Yeah.
Yep.
But now, just this week, a new secondary stock offering.
Mm-hmm.
First of all, again, breezing through your show notes, give me the pros and cons of this for investors, because again, just gliding by at a glance, it's like, well, anytime you do a secondary offering, it's dilutive to existing shareholders. So what's your take on, first of all, if you're a Tesla shareholder, are you happy about this?
So I think there are a couple things to consider. On the Q4 earnings call, Elon and their CFO, Zach Kirkhorn, essentially said that we have no need to raise capital. We're spending capital as quickly as we can. And
so wait. Literally in the earnings call that just happened this week, they said they probably weren't going to raise more capital, and then they immediately raised more capital.
Yep. So 2 weeks ago now at this point, and some circumstances have changed. I mean, the stock is 33% higher now than it was at that time. So, that's a pretty significant difference that can cause you to reconsider. And Tesla moves quickly. Things can change, even with their own projections and things like that, and their own goals and, CapEx plans and all of that. So things definitely change quickly. But I would also say the best time to raise capital is when you don't need to, because that's when your share price is going to be the highest. That's when you can get the best terms. So what they've done is they've issued 3 million, roughly, new shares into the market. They have about 181 million shares outstanding before. This will bring it up to 184 million. So it's only about 1.7% dilution on the company. And they're raising about $2.3 billion from that sale in cash, which should put their cash balance up to about $8.5 billion. And as they said, going forward, they should be free cash flow positive. In 2019, they were free cash flow positive, generating $1 billion in free cash flow. So from here on out, they should continue to grow that cash balance pending, if they have any more aggressive sort of spending plans. So they said they just are using it for general balance sheet purposes to strengthen the financial, standing of the company, which does make sense, I think, because they can get, better credit ratings, better debt terms and things like that, and reduce risk if there's a recession. So there are a lot of benefits to that, especially at this time where we're, at all-time highs, where Tesla's got $140 billion market cap, the second most valuable automaker, things like that.
I'm sure you've seen this take, but this was my take as soon as I saw that there was going to be a secondary offering. Why only what did you say, 2.3?
2.3, yeah.
Well, because, all right, if we're assuming that it's not a short squeeze, all we know right now is people want to buy Tesla stock.
Mm-hmm.
So give it to them. Why only 2.3? Like, it seems like you could do 5 or 10 or something crazy.
Yeah, I'm sure there would be, demand for that sort of an offering in the market right now. I think the thing for Tesla is they're trying to dilute as little as possible over time. And historically, they have added shares as they've needed to raise capital, and that's been one of the criticisms on the share prices. The share price is never actually going to grow because they're just going to keep diluting and adding capital. But now that they are free cash flow positive, they don't need as much capital, and they can also access more capital through debt as their financial position has grown stronger. So they don't really have, as they said on the call, they don't really have that much of a need to raise more than what they have here. And even this is, I think, more of an opportunistic type of a raise than something that they really actually needed to do.
How about this take? And stop me if you've heard this. Matt Levine, he has a newsletter in Bloomberg Opinion. If you haven't heard it, let me read it to you a little bit.
Sure.
He's like, if I were running Tesla, and this is part of why I'm not, He's like, I'd probably announce a stock buyback program today also because why not? But he wants to go bigger. He's like, sell 10 billion of stock today, use 8 billion of it to build cars and stuff, but then set aside 2 billion and use it on stock buybacks if the stock dips below, $500 or whatever. Because he's like, Musk has said before, we're subject to wild swings in our stock price that can be a major distraction for everyone working at Tesla. So why not make these wild swings work for you? Why not, like, when the stock is too high, sell more stock. When the stock is too low, buy it back. Like, then all of a sudden you wouldn't have to worry about the crazy back and forth. Like, it's insane to think about Tesla doing stock buybacks right now. But again, make hay while the sun shines.
Yeah, I think with that sort of strategy, I understand the logic behind it, but I don't think the brokerages and the underwriters of those sort of deals would, look too fondly on Tesla 1 month selling a bunch of shares into the market and then, the next month coming back and buying those shares back cheaper. I don't think they would be very appreciative of that. And it would also just be weird to sort of be, trading your own company like that.
But everybody trades their own company right now. Actually, that's a larger point in his newsletter that day. It's like that, essentially, most big public companies now use the stock market as a way to return capital to investors.
Sure.
So in a way, and listen, again, neither of us do this for a living, so we don't know what we're talking about. But I don't know that it would be that insane to the bankers because that's what everybody else does.
I think a lot of times that's one direction, though. Either you're selling shares and raising capital or you're buying shares back and returning capital. Like Apple, for example, they've had huge share buybacks, hundreds of billions of dollars over the last few years. And that's definitely helped their stock price. But they're not then, 1 month going back and selling more shares just because the stock, went up. So I think it's generally one direction. And I think the multi-direction trading aspect, maybe there are companies that are doing it, not any that I'm aware of, but I think that would probably be frowned upon. And, Tesla's already under enough financial scrutiny that I don't think they need to add that.
That is true.
One thing I will say on that point, though, they do offer convertible debt, and they do have sort of call options to hedge against that convertible debt, where if the stock price is, high when that debt needs to be converted, Tesla is hedged against that. So they are doing a little bit of that more as a hedge than to minimize dilution than actual like trading, but they are, taking advantage of some of those financial instruments.
Is this vindication or early vindication or complete vindication for Tesla bulls like you? I assume you would consider yourself a Tesla bull, right?
Yes. And I should mention I am a stockholder as well.
Yes. So like, have you all been just, clicking your heels,
celebrating, pouring the champagne?
Yeah.
Frankly, to me, this seems long overdue. And I know the stock price doubling or tripling in 3 months seems crazy and it feels like, a short squeeze, something like that. But if you look at the numbers, Tesla back in 2014, so 6 years ago, they had a share price of $280 per share. So we've only, tripled from that level over 6 years, which is nothing crazy. And Tesla's revenue when the share price was $280 per share was $3.2 billion in 2014. And in 2020, they'll do $32 billion or more. So they've 10x'd revenue over that period of time, and the share price has only tripled. So with dilution, the market cap has gone up a little bit more than that. But the point is, just because it's compressed into this one small period of time doesn't mean that Tesla's necessarily overvalued. I mean, you can definitely make arguments for that. I don't buy into those arguments. But
are you worried that though maybe because it's only natural, even if you're a total bull, the stock can get ahead of itself.
Sure.
You know what I mean?
Mm-hmm.
And I'm saying I'm hearing you say that long term you still think there's plenty of room to go, but for right now maybe it's gone too far. And we saw it go up and come back a bit, although it's creeping back up again now.
Mm-hmm. And that's the tricky thing. Like you always want to try and time things if you're, trading in and out. For me, most of my investment is, 10-year plus time horizon, just because I think the potential Tesla has to become a $1 trillion market cap company is very high. So for me, I'm not interested in sort of like selling out my position here just because I think there's a chance that, things might stagnate or dip back, because it doesn't really matter too much. Yeah, maybe I could buy them back cheaper a little bit later, but on the other hand, what if I can't? What if something, what if some good news happens and the stock goes up to, $1,300 a share, and then I just lost, 30% of my shares or something like that. So you could take that risk. It's just not something that I'm personally interested in, because even at this valuation, I still think Tesla's undervalued for the 5-10 year time horizon.
Real quick, is there any coronavirus risk with supply chain with the factory in China? Any reporting on that?
Yeah, definitely. So there is some downtime. They had about a week to a week and a half of downtime at the factory, unplanned due to coronavirus. And there's some risk in the supply chain too, of course, as that sort of impacts all businesses there. So there's definitely risk. And I think that, maybe is a factor in why they chose to raise capital, is maybe just hedging against some of that risk a little bit in case it stays out there for a more long period of time. So there's going to be an impact. That being said, the production out of Gigafactory Shanghai right now, which is their Shanghai facility, is much lower than it is in Fremont. So I think the bigger risk is actually within that supply chain. If they produce no vehicles out of Gigafactory Shanghai this quarter, it's not going to be a huge hit for the company. Yeah, they would have liked to have had that production, but it's not something that's going to cause a huge swing financially.
Last question, and this is going to be an odd one, and it's almost like a personal one, but I've been talking on the show recently about, like, I'm sure you're aware of the whole like Tesla Q crowd and the Tesla bears. Yeah.
Yes.
And I've been mentioning that in the context of, I feel like that's sort of everywhere now, where like you see it in crypto, where there are people that are Bitcoin maximalists, people that are XRP stands, and they fight all the time. And it's this back and forth battle. They can get very heated. It's like everything's partisan now, right? And so it's a weird thing where, like, in this space and in the crypto space and in other spaces, I can still dip my toe in and I have no beef on either side. Mm-hmm. So I'm just curious, and this is where it's almost personal, and I don't even know if I'm asking a question here, really. But when because you're doing this daily, this is your livelihood now, like giving this information to people. When you're involved in a space like this and it's so vitriolic, and but people are so invested in being right or wrong. Mm-hmm. How does that affect you on a daily basis? And then are you gloating against the Tesla Qs right now? You know what I mean? I'm just curious what it's like to be in it. And I'm not being pejorative at all. I'm not saying it's bad to be in it, but I want to know what it's like.
Yeah, no, it's a really interesting question. I'm just trying to think of how to respond to it. I mean, for me, I've never been one that has been like, I think kind of like yourself, I try to be as open-minded as I can, and I'm not one that's out there, poking Tesla Q people on Twitter or anything like that. Like, I pretty much just, do my research, report on what I see, rely on my own analysis. I'm not out there, trying to start arguments or go find people and tell them that they're wrong. I'm really just trying to spread the information that I believe is accurate. That's really what I'm about. So I'm not as heavily involved, definitely aware of Tesla Q, and they're definitely an interesting community. The thing that I would say about them is it's just something to be careful about, because they do a lot of like filtering. They're sort of famous now for having this block list on Twitter where if you make any sort of positive comment at all about Tesla, even if it's not related to like directly to them, they'll put you on this block list.
Let me interrupt you, because I'm aware of that too. Like, there's famously VC Twitter. Like, if you're not, people always accuse VCs of, and thankfully I'm not one of these people that get blocked, but if you're insufficiently enthused about how tech is changing the world, then you get blocked. And so again, this is sort of the phenomenon that I'm curious about. Mm-hmm. So let me ask it this way. Like the Tesla Q people, do you, like, 100% you think you're right? But do you, because again, I'm an outsider. I've listened to podcast episodes with Tesla bears, and they've made a case, and it can go all the way to Elon Musk as a fraud and a huckster but I've listened to episodes where I'm like, okay, that makes sense to me. The case you just made me think, yeah, Tesla is in trouble. And then I listened to your show, and I'm like, no, listen, man, we're only at the early days of this sort of stuff. So I'm curious about, is it, when you look at the world just from your perch in Tesla, if I'm not committed, if I can still look at both sides, I'm not asking you if you think the Tesla Q people are delusional, but can you see, it's almost like the political question, can you still be a moderate? Or
I absolutely try to. I try to see the other points of view, and I try to approach things with an open mind and, explore the idea that, maybe I'm not right. That's definitely a possibility. There are no guarantees in this, and investing in any single company is high risk. So it's definitely considered.
Yeah, take your time, and I'll completely edit this. And again, this is a difficult one because I don't even know what I'm asking. I just want to know. I'm not so committed to anything, and I'm not saying you're like a zealot or anything. And also you're winning,
right?
So I find that curious too. Like, what's it like to be on the side that's winning at the moment?
Yeah, I think for me it's somewhat validating, but at the same time, it's not surprising. I think, I've been following Tesla literally hours every single day since 2013. So 7 years now. And, I have a lot of conviction in the company and what they're building, and the inability of the entrenched automakers to be able to compete with them. And, some hiccups along the way, but thus far things have pretty much played out as, we expected back in, those early days. And if you look at sort of how Elon Musk has laid out the plan for the company, early on, he said, secret master plan number one, we're going to build an expensive low volume car. We're going to use the profits from that to build a slightly less expensive, slightly more volume car, and then profits from that to build a high volume mass market car. And that's what they've done step by step by step. And it's just been extremely clear. And they've achieved that, again, not maybe without some flaws along the way, but largely they've accomplished what they set out to do. And other people just have not been able to compete with that because of, they have entrenched dealerships, they have investment into internal combustion engines, they have organizational structures that are not set up to be able to build something from the ground up anymore because the supply chain is so heavily parted out and things like that, where it's more of a package deal. You're sort of packaging things together versus creating things on your own, where Tesla's all vertically integrated. There's just all these list of things about why Tesla should be successful. And really the only counter argument has been, Tesla's not profitable or Tesla's a fraud. And Tesla's now answering those questions and showing that they can be profitable, and that the demand is there for these vehicles. So as those questions get answered, that's why we're seeing the stock price increase, because people are starting to realize that the position that Tesla is in is just extremely strong, and the position that other people are in is, tenable at best. So I don't know that necessarily answers your question.
No, it does. It does, because there's not really an answer there. It's more, I just want to understand the psychology, and it's a weird thing. It occurs to me that, as opposed to politics or other spaces where everything is so, arguing about whether the new Star Wars movie was good or not, like there's no way to prove. But then for things like stocks or like numbers, or the only other analogy is sports. Like if you pick a team and your team wins the Super Bowl, and you've been saying for 20 years that we're the greatest team in the world, well, it's provable because they won the Super Bowl, Yeah. So it's interesting that the math will prove or disprove or whatever eventually.
Absolutely. And that's kind of why I said at the beginning is just like, I'm really just about reporting on things and looking at the data and analyzing it as best I can. And ultimately, I feel like that's going to end up somewhere. And if it doesn't, like, there's probably something that's along the way going to show that I'm wrong. And then, I'll adjust my point of view. But it's just sort of that day-to-day reevaluation. So that's why I think I'm not out there, gloating or anything like that. I'm more just focused on like, all right, where are we at today? What's new? What's different? Are things still on track, and where do we go from here?
Rob, Tesla Daily Podcast, right? That's where you do this every day.
Tesla Daily, any podcast app. I just got on YouTube too. So you can find me on YouTube. Just search for Tesla Daily Podcast.